The child tax credit is more than just a number on your tax return. It's real money for your family, but you only get it if you know the rules and understand how it works. I'm Mark Steber, Jackson Hewitt's Chief Tax Officer, and here's what you need to know before you file this year. The child tax credit is not new, but there are changes this tax season. Even if you don't normally file because your income is below the minimum threshold, you should file your tax return if you qualify for the child tax credit because you could get a refund from this credit alone. Plus, filing a tax return each year helps protect against identity theft. What is the child tax credit? Well, for tax year 2025, the child tax credit is worth up to $2,200 per qualifying child under 17 who lives with you for more than half the year. Only $500 is non-refundable. How much you receive depends on your earned income, modified gross income, and your filing status. Married filing jointly phases out after $400,000, and all others phase out after $200,000. If you earn more than these limits, you may still get part of the credit, but not the full $2,200. The refundable portion of this credit is known as the additional child tax credit, and it's worth up to $1,700. The additional child tax credit is really designed for families who may not owe enough in taxes to use the full child tax credit. If your income is unearned, like interest, alimony payments, child support, Social Security pensions, and others, you may not qualify for this credit. Who can claim the child tax credit this year? A common myth is that only the child's birth parent can claim the child tax credit, but that's wrong. The IRS has 7 tests: age, relationship, dependent status, residency, financial support, citizenship, and income. If you meet those, even if you're just a step-parent, grandparent, or even an aunt, you can still qualify. The child's age must be 17 or under and is based on the age they are on December 31st. If they turn 18 before the end of the year, you won't qualify. To claim the child tax credit, the dependent must be a U.S. citizen or a national or resident alien and have their own Social Security number with the correct spelling of their name on the tax return. You can work with your tax pro to fill out Form 1040 and attaching Schedule 8812 to your tax return. Are there other child-related tax credits besides the child tax credit? Yes. One that is often overlooked is the Child and Dependent Care Credit. This is a credit worth up to $1,050 for one child or $2,100 for 2 or more. It is for those with dependents under the age of 13 who are in daycare or things like daytime summer camp. The credit amount is calculated based on income and a percentage of child care-related expenses. In general, to qualify, parents must work or be full-time students and use a daycare, summer camp, or another program while they work. The provider must have a Social Security number or taxpayer identification number, which will be needed to apply for the tax credit. Tax credit qualification is not for those who have their children go to overnight camp. It is for daytime services. And starting in 2026, the Child and Dependent Credit will be enhanced. The credit will increase to $3,000 for one child or $6,000 for 2 or more. Another child-related credit is the Adoption Credit. Effective for 2025 tax filing season, $5,000 of the total credit is refundable. And that refundable portion is also subject to inflation adjustments, so will probably get even bigger. The adoption credit covers up to $17,280 of qualified expenses per adopted child. Qualified expenses include things like adoption fees, legal fees, travel expenses, and paid expenses before an eligible child has been identified, such as home studies. The refundable portion of the adoption credit cannot be carried forward to the next year if it's not used. The adoption credit and the exclusion apply to international, domestic, and private or public foster care adoptions as well. It is not available for those who are adopting their spouse's child, surrogacy parent arrangements, or if the expenses are being reimbursed by the taxpayer's employer. To claim the adoption credit, you must have a modified adjusted gross income of $259,190 or less. Otherwise, the credit is reduced or becomes unavailable above that threshold. There are consequences if you incorrectly try to claim the child tax credit, even if it was a misunderstanding. These can include penalties, repaying the credit, fines, and even fraud charges. Claiming a credit you don't qualify for can negatively impact your financial future, so don't mess around. On that same note, if you're in a shared custody situation, you should work with a tax professional to ensure the correct person claims the dependent, and it's not just who files first. Mistakes can cost you. Don't risk it. Work with a trusted tax pro and schedule an appointment today at jacksonhewitt.com.